Welcome everyone to another episode of Stable School Podcast. I'm Raza, your host, head of growth at Scroll, and I'm here with Ramy from Stablecoin Standard.
Yes, hi, Ramy Soliman from Stablecoin Standard. I helped to co-found it, one of the three co-founders. And in my day job, I'm president at GMO Trust, stablecoin issuer.
Amazing. Ramy, what is Stablecoin Standards?
So Stablecoin Standard is the industry body for stablecoins. So we initially set up 3 years ago, when stablecoins were not so cool, as a forum where stablecoin issuers could get together to do, business development, educate the market. I represent Japanese yen stablecoin. My colleague Christian, he was at the time at Sterling GBP stablecoin. The other co-founder, Ryan, was at StraightSex, which was the Singaporean dollar stablecoin. And really, there wasn't much momentum or market for non-dollar stablecoins. So we didn't really have a voice. And of course, the major things, it still continued to be the case, are dollar stablecoins, but we wanted to have a voice for the rest of the ecosystem. So it started off like that in typical crypto way. It started as a Telegram chat. I think we got like 25 different issuers in various states of maturity, different currencies, all in a group, and seeing whether we can work together in can we work together to put liquidity on a DEX? Can we help grow our AUM together? How do we work together? How do we do due diligence on each other if we don't have a forum, that kind of thing? And then it sort of gravitated, matured. We started doing more policy work. We recognized that it was important for the industry to have a voice when legislation is being passed. So, my background is TradFi, and particularly in FX prime brokerage, and this kind of area. In that world, there are industry bodies that the major participants, the banks and the brokers and so on, they have a union, an industry body where they engage with regulators and have dialogue. I didn't see that for stablecoins. When I came into stablecoins 2022, it was, maybe Circle, Tether, having direct bilateral relationships, but we didn't have a voice of the industry. So that was what the motivation was. Partly, can we do some BD? Partly, can we make this a bit more mature as an industry? We recognize the fantastic potential of this product, but in terms of the structure that we have from the participants, it was a little bit immature. So we thought, right, an industry body is the beginning. Let's see where it goes. And, it's gone nicely from there.
Wow. Yeah, so Stablecoin Standard is actually much more than what I thought it to be, which is it like the Moody's of stablecoins, or is it like a rating service? But
No. Although having said that, that is a spin-off thing that we are going to be doing. So actually, it's good you mentioned that. In the next couple of weeks, a project we've been working on internally, we call it StableCheck, is a product that will be coming out in the next couple of weeks, which is, you're right, especially now with all of these stablecoin issuers coming in and creating, how do you rank them? How do you know which one is legitimate? How do you know if they do their attestations correctly? What's the hierarchy? I mean, if you're in crypto, you might know what to look for, but if you're not, and we think that these things are going to become mass adoption products, you don't know where you're looking. So we wanted to build upon the stablecoin standards that we wrote last year. So we have a policy department, all pro bono, by the way, policy department that we worked on, that launched some stablecoin standards. It's just principles-based standards. You need to be attested, you need to be regulated, you need to do a few different elements that make you a good participant and meet the stablecoin standards. And it was building off the back of that, right, okay, how do you make sure that they meet this criteria? There's probably like a check mark, where are they regulated? How do they attest? What are these kind of things? So we're now productizing that thing, like turning it into something that, regulators and corporates can look at and see where that goes. But yeah, that's an element of it, yeah.
So essentially, Stable Standard operating in what was a vacuum in the space for players who didn't have a voice. And now you're actually extending that so that retail could come in and say, stablecoin XYZ, there's a new stablecoin. Do they have the check mark or not? That's what StableCheck is meant to be.
And it gives an opportunity for the good actors to get that StableCheck marked so that people know that they are a quality stablecoin operator. And I think what we evolved in. I think we've become now this year not just working for the stablecoin issuers, it's maybe for the stablecoin industry. So, our participants and our vendors are now market makers, exchanges, layer ones, layer twos, custody providers. These kind of things are all, if you look at our website and that ecosystem, it's not just the issues, it's anything that touches stable coins, the participants and the good vendors, transaction monitoring and, things like that, Chainlink and, Merkle Science and these kind of people, they're in the group. And together, this is like a forum for anyone who wants to be something in stablecoins, wants to participate in stablecoins, wants to communicate with other people in the network. We hope that we're that unifying forum that can, and neutral. That's the other thing that's really important. It's important not to sort of have an axe or an agenda. We want to make sure that we sort of leave our day jobs at the door when we're doing Stablecoin Standard, and this is for the good of the industry. And we think that organically, you have that credible neutrality that can help grow the thing.
It's amazing. So, and it's all pro bono?
Yeah, pretty much. So, I mean, we take in vendor memberships and this kind of thing. So, we have gold sponsors, vendors, we have events, that pay. But the money that comes in goes back into the industry, goes back into education, goes back into other things. So, yeah, it's great.
Do you think it's a problem that most stablecoins are denominated in dollars?
Yes and no. I mean, most of crypto is denominated in dollars, so it's natural that the stablecoin cash is going to be dollars. But we're on and it's funny, I had this conversation today or this week. I feel like we're at an inflection point where local stablecoins are going to be much, much more relevant. You started to get regulatory clarity in a number of different jurisdictions now that are meaningful. So maybe it started with MiCA, Japan. So, for our yen stablecoin, we now know the regulation we need to follow in order to issue a stablecoin in Japan. These are meaningful markets. Euro and yen are the big ones. Sterling, UK has been a bit slower in terms of their regulation. But where I live now, in the UAE, for example, there is very mature regulation around stablecoin issuance. Both domestic dirham stablecoin issuance and dollar stablecoin issuance. So, even people like Paxos issue a stablecoin out of Abu Dhabi, for example. So, I think we're on, an inflection point where there's going to be a lot of non-dollar use cases going to come to the fore. Hong Kong, is a major place that we forgot to talk about. But
Yeah, I think I always go back and forth. We're going on a slight tangent, but like FX, I'm hugely fascinated by it. We have a founder in our ecosystem that is actually building an on-chain FX protocol in a very novel way, single-sided liquidity. So he essentially like shorting the other end, more of a synthetic pool, so to say. Yeah. But what I've seen with countries banning crypto is because of one of the reasons was massive capital outflow. Of course. Yeah. Access to dollar became super easy. And so they actually saw the risk of that. Yeah. One of the risks of these currencies, which a stablecoin doesn't take away, or not inherently, I think, is that inflation component. Yet you do think that, local stablecoins will rise, or is it just for certain local stablecoins?
Exactly. I think you hit upon a very important point. I think we're in a world where there's almost like a 3-stage hierarchy. You got like dollar, top stablecoin, top countries where there's no sort of flight risk. People want to have money in these economies and these currencies that effectively represent those economies. You're going to have countries which, if they take the plunge to do their own digitization of their currencies, have an opportunity to build a moat. I would think somewhere like Turkey, Brazil, Singapore, Hong Kong, they're, I think, at the level higher. But, these ones have enough natural trade that people want to do business in their own currency. They will do that. I think the third category of countries, places like Argentina, places like Lebanon, places like Egypt, these kind of countries where there's going to be inevitable dollarization of their economies. And the threat is that these stable coins and other forms just capital flight and erosion and effectively sidestep having to interact with the central banks and their economy. So those countries lose control over their economic policy in these. So I think that's an inevitable consequence in a few countries. I think it's going to happen, but it doesn't have to be that way. I think, for example, sterling and other sort of euro reasonably big countries have the opportunity to digitize, go down the CBDC route, go down the stablecoin route, and protect that sort of sovereignty of their country.
Yeah. Just double clicking on that before we go back to stable standards.
Sure.
I think, but inherently the risk remains for like weaker currencies.
Yeah, but that's there
anyway,
already. It's already there.
It's already
there. It's just more blatant now that crypto allows this to happen at the speed of the internet. In countries like Argentina. Let's take Argentina. I was there sort of when I first moved to GMO Trust. We went to Argentina for a stellar conference. That was 2-3 years ago. And even then, there were like 4 different exchange rates, for dollar. The cambio, they're wandering around because people didn't want that currency. That currency was deflating by 10% a month.
Wow.
So can you imagine sort of being able to get paid in pesos, but actually your rent is your money is devaluing by 10% a month. So that's been there for and it's not just recently. It's not just since the advent of stablecoins or crypto. That's been a generation of poor economic management of that country that has meant to proxy dollarization, and that's the same for many countries in Africa, a couple of countries in Latin. There are lots of countries where they have had to impose capital controls because of mismanagement of their economies. I think the cryptocurrency evolution has just accentuated and made it easier for people to save their money, preserve their wealth.
Yeah.
There's so many gig economy workers now getting paid in USDC. What's the on-ramp? They're not the on-ramp, but the players get a debit card or a credit card that's linked to your wallet and your USDC, and it's done. So that's how it's working. But it's now. I was at the Straight Stable event yesterday here, and now Argentina's expensive. So now tourists from Brazil used to come to Argentina because it was cheap, and now it's the other way around. The price has gone up. People now from Argentina making money going into Brazil, but using PIX, PIX, UPI. There are examples where it doesn't have to be stable coins. The real-time gross settlement systems in some of these countries are good systems and can help innovate growth in those regions as well.
Interesting. Last question, but then I promise we'll go back to Stanford because it's like, do you think that some currencies will just die?
Yes. Yeah, absolutely. Why do you need good example that's now is Zimbabwe. Mm-hmm. Zimbabwe, I have a bookmark at home. I think it's a $1 trillion note, that's a useless currency. Why do you need this currency? What's the point of it? It's like the in the 1930s, it was the Weimar Republic, hyperinflation, people taking wheelbarrows of cash to pay for a coffee and that kind of stuff. So you get to a point where a currency, if it doesn't have relevant utility for the location that it's in, will quickly get circumvented for another currency that people will prefer to accept for commerce. So, why is the dollar so strong? Why are dollar stablecoins so strong? It's because people like having access to dollar. Why? Because that gives you access to the risk-free rate of a country that's, a very strong participant in global trade, that has power, and therefore that's a safe currency that I would happily accept. As why is oil priced in dollar? That's part of a political thing from the 70s, but there's a reason for it because it's a stable currency and so on. So that's why you're having so much dollar growth. But it's also the reason why some of these countries, if they don't maintain relevance for their local currency, importance, then they can get sidestepped very quickly.
Makes sense. Going back to stable standards.
Yeah.
How do you assess stable coins?
How do we assess stablecoins? So at the beginning, when we wanted sort of our issuers to join, we recognized that there's a full spectrum of stablecoins. Even in 2022, I joined GMO Trust the month of Terra Luna. So, that shows algorithmic stablecoins were still out there and didn't work very well, as we know.
Yeah.
So we thought, okay, how are we going to build credibility for the product of stablecoins. So we thought, right, stablecoin standard, let's make sure that it's fiat-backed, regulated where possible. That was the standard at the beginning. Like, do you have liquid reserves? Do you do attestations if you're required to? Are you regulated in a country where, are you regulated in the country where you operate, if there is regulation available? Those were the beginning things that we had just as the guiding first back of the envelope standards. And then we did a letter. What did we do? We did some guiding principles later in 2023. And then we built upon that to have a full set of standards in 2024, where we, again, pro bono and work from lawyers, and they scoured all of the international regulation, upcoming and current. And off the back of that, we sort of harmonized what we think are the high principles that are common across all of the global regulation. And that's what went into the stablecoin standard. So those are the principles that, we want our stablecoin standard issuer members to adhere to. And that's where we're sort of codifying, I would say, a little bit, or making it easier through the assessment process with this StableCheck product that we hope to. I say it's a product, we're not selling it, but just to launch this thing so that people can actually have an easier way of materially assessing a stablecoin vis-a-vis another stablecoin.
Will you expand to other types of assets or DeFi protocols in assessing them, like according to a standard, or?
We can. I mean, DAI is an extremely large, well-run stablecoin. So, at some point you probably want to think about something like that. But there are a lot of tools out there that already do some really great on-chain analytics. So whether it's like Artemis, or whether it's Particular, or, we spoke with Moody's and S&P, all of these people have ways of doing that. I mean, RWA.xyz is a very good source of information for on-chain analytics. So there's lots of places where if you want to look for DeFi analysis, whether it's sort of stable, price activity and so on, you can go to those places, I think, because they're not like an entity where it's regulated. It's DeFi by nature. So, maybe we're not the right forum to necessarily make a call on whether it's a good stablecoin or not. They're not, they don't care. It's like it's a DeFi protocol. That's the whole point. So, So my thought process is that I don't think it will go that way. I think where it can go is potentially, could we start to look at stablecoins that are backed by precious metals, gold, for example, like regulated stablecoins that do, they're backed by not fiat currencies, but maybe metals. That could be an interesting one. I don't think we want to go down the route of like real world asset stuff.
I was going to say,
you know what I mean?
like
The tokenized
emerging
treasuries and the stuff. It's quite fungible. That's the problem. Not a problem. It's an issue, I think, in digital money because it's quite fungible and a fluid product. One guy's payment instrument could be another guy's investment instrument. It's another guy's collateral. One pays yield, one's not. One could be a security, one's not. And they're very versatile products. One stable could be all of these things, actually. So, it's good collateral, pays a yield, does this. So it's important to try and categorize in the way that the regulations are looking at it. And I think they're looking at it in a more compartmentalized way. A lot of regulation calls stablecoins payment tokens, for example, and it separates, MiCA, I think it's, payment token, and I can't remember the other category, but it's different.
Yeah, and I mean, essentially, if it's not fiat-backed, you just view it as a financial instrument or a security.
I think so. I think that's the way to do it,
Yeah, it's double-clicking on that. I think regulation has, I think, a negative connotation when it comes to, like, crypto core, DeFi core people.
Of course. Well, I would also argue that, I would say it's pretty ironic that, I'd say, one of the most successful things out of the thing that's going to get mass adoption in terms of getting people onto the blockchain is a digital representation of fiat, which is almost the whole point of why Bitcoin was set up in the first place, to get away from the banking system. So what we've done is make it slightly better and bring it on chain, but it's the same system. I feel like that's, if you're a DeFi DJ, and you might look at that and think, actually, we've gone backwards, not forwards. You know, so
It come full circle almost, where it's like it's forced. The assets off, like assets option to bring them on chain, but it was my specific angle for this question is number one, like two layered. Number one, you see regulation, and it's normal in primitives. I have a TradFi background too. Is that when regulation starts, it's very rough. Sometimes definitely doesn't go into the right direction. It also
it's uninformed. That's the problem.
It's uninformed. Thank you.
That's the problem, and that is a core reason why we set this stablecoin standard up, because that was what I was frustrated about was that regulation was being drafted. So I was like based in London, and UK regulation, there's round tables and committees and stuff, but no one from the stablecoin world was responding to it at the table. Yeah. So I was like, well, someone needs to be at the table. It can't just be two individual companies that are doing it. It needs to be someone else. It needs to be the industry. So who's going to gather the industry so we can talk about these things? So that's how we get more informed regulation. So it's no surprise, I'm not saying it's us obviously, but it's no surprise that I think the quality of the regulation has improved the more informed the regulator gets. So the first mover is always going to be rough and ready, like you say. But, if you compare, for example, the approach taken by MiCA and you take the approach taken by America with the Genius Act, for example, that's night and day. That's what has happened. It has meant that business has wanted to go now back to America, culminating, I'd say, in Tether, who don't need to do anything. They're doing extremely well. And now we're issuing a product for the American market. Whereas Tether earlier in the year, because of the MiCA regulations, had just abandoned the European continent.
Got kicked out.
Do you know what I mean? They got kicked out, and they didn't care. Yeah. They didn't. That didn't encourage them to issue a MiCA compliant stablecoin, did it?
But
they have a euro stablecoin.
That's a very interesting comparison.
Whereas Genius comes out, regulatory clarity.
Interesting.
They will issue USAT now. So
that's a beautiful example of how regulation can prohibit or accelerate essentially the adoption.
Our head of policy, Beth, she has a really good phrase. It's called responsible innovation. And I really believe that that's responsible innovation comes from responsible regulation and innovative regulation. You want to try and make people play in your ecosystem and be comfortable in innovating, and I think you can see the material progress that stablecoins have made has helped the banks wake up and improve their game as well. So, without the Tethers and the Circles and the Paxos leading the charge, would you have got the deposit tokens from Citi? Would you have got the Connexes from JP Morgan? You may have. It might have been a bit slower. But look, this forced them to innovate within the bank. And now we have a good spectrum of products now, I remember coming into GMO in 2022 when Terra Luna just finished, and stablecoins, we have a short memory. Stablecoins were not the favored product.
Oh, no.
And even now you still see Bank of International Settlements, BIS, when they come out with some of their reports, they're not pro stablecoins. They're still very CBDC oriented or deposit token oriented. So I feel like it's only in the last sort of 12 months that stablecoins won this sort of battle to be the future form of digital money. So that only happened recently. So since then, there's been a lot of momentum. But if you have a spectrum of products now, you've got in some countries, you've got CBDC plans, you have tokenized deposits or bank tokens from banks, you've got stable coins, you've got a choice depending on who you are, and what your use case is. That's much better than what we had 2 or 3 years ago.
It's true. I can't help. Maybe I've left TradFi for so long that I fall back into a more of a crypto native angle, where I guess my biggest pet peeve with regulation is exactly you characterize it very well when you said look at MiCA and Genius Act. Is that regulation often gets the impression, safe or good or bad, right? And I think that with a lot of I think the tricky part with standards are general standards is that if you get a check mark or regulated, what does it actually say?
Very true, very true. And this is why the stablecoin standards themselves are sort of principles based. So regulation is one of many different. That's not the only way to rate a stablecoin. In TradFi, there's regulatory arbitrage. The regulation in the US is stronger than the regulation in other countries, but you can be regulated in these countries. Like, for example, I was in foreign exchange. I worked at a bank, but my customers were brokers, and you can be a broker in an FX forex broker in many different jurisdictions, which have completely different regulatory standards, and there's a major hierarchy in that. So just saying you're regulated doesn't mean anything. If you're regulated by, I'm not going to call out a jurisdiction, but if you're regulated by a low-ranked jurisdiction, that's not the same as being, EU regulated or UK regulated or Australian regulated or Singaporean regulated or US. So it's different.
I mean, even among, they're no longer part of the EU, but if you look at UK and the Netherlands, for instance, the solvency rates for insurance funds are like, they're not night and day, but there's differences. Like you said, regulatory arbitrage happens all the time, moving capital around. Just to make sure that you have a proper capital upstream. So, but if you look at stable standard, you mentioned a bunch of things where BD bringing people together, now coming with checks. What do you see as still the biggest gap outside of the standard that for assessing stablecoins around stablecoins?
Education. I think it's literally still education. I think we live in our crypto silo.
Oh, so true.
And we just assume everyone knows as much as we do. And it's not the case at all. I think if you asked 100 people in Singapore, even in this week, when the conference is going on, do you know what a stablecoin is? I don't think that 80% of the participants would know.
But do you think products will get so good that under the hood it's a digital dollar, or do you think
that's a different question? And I do think that's the way that a lot of this may go. I feel like there are going to be, I don't know what the way to call it, front stablecoins, back stablecoins. There's going to be infrastructure stablecoins, which people will just use because it's a more elegant and efficient way to manage their own treasury. So I can imagine absolutely a multinational company or a bank or, those kind of companies will just tokenize their inventory and their treasury, their balance sheet, and they'll just use that as a cross-border way of efficiently harmonizing their accounting and their standards. I think that will happen. And it has nothing to do with the customer-facing end of the spectrum. This is just them moving. If you're an oil company, like let's say you're headquartered in the Middle East somewhere, but you've got offices in a place where oil is, Nigeria, Uganda, these kind of places, and you need to move money around, that using the SWIFT system, if you're the treasurer of this company, is not easy. You're just moving from one subset to another subset. It's within your ledger, basically. But to do that, actually, is tough. It's tough and can take many days, can be costly, and can be risky as well. So, if you can tokenize it and just move it using a stablecoin, that's actually a much better way of doing business. Then I think you will get back-end infrastructure stablecoins that will pretend to be a dollar for the end participant. So, maybe it's a bad example, but one of the good things that FTX did, I don't know if you remember if you had an account with them, but they had fungible forms of dollar. So you had dollar, but if you put USDC or USDT, they would just call it dollar. Yeah. And it didn't matter, if you wanted to withdraw, you'd withdraw, dollars, but if you wanted to. But it was fungible, and it was behind the hood, it was just counted as dollar. I see a lot of that happening in the future. Yeah. I feel like any sort of B2B2C sort of opportunity where there's a customer-facing end, I'm absolutely certain that stablecoins will form some part of the workflow behind the scenes. But it's because we're on e-money anyway. You pay with Apple Pay. Do you care that it's a stablecoin that happened, or is it fiat that generated it? Or if the dollar in your DBS account is different to the dollar in your JP Morgan account, but you don't know, you don't care. Everyone abstracts it away. And I think this is what it will be. Stablecoins will be that abstraction layer. It'll just be a quicker way of moving money. So I think you're going to get that. And then you'll have front-end stablecoins like USAT, Tether, Circle, Global Dollar, these kind of things, which will be actual identifiable stable coins that people will want to use for a variety of reasons. So, store of wealth, money transfer, onboarding into crypto, whatever the use case may be, that will be there. But I think the biggest growth in terms of Web 2 adoption of stable coins will be hidden. I don't think the customers necessarily need to know or care that it's a stable coin. Particularly if you're in the developed world. I think there's a very different thing in the global south where it's identifiable that your banking system is broken.
Yeah.
You're already crypto savvy. Yeah. You're already mobile savvy.
True.
You already are outside the banking system in the first place. So you might as well stick with the stablecoin because you know about it already. What's the stat? There's a stat certainly in Egypt, but I think it can be mirrored in a lot of different places in the global south. Like, I think there's 100 million people, give or take, in Egypt, maybe 110. I think like 80 million have a smartphone, and 20 million have a bank account. So their mobile is their bank. It's much easier for them to participate and go straight to the crypto economy and not need a bank. And you can see now some of the evolution of crypto, where it's going, crypto financial services, is stablecoin powered neobanks, effectively. Yeah. This, I think, is pretty cool.
Because that's the direction,
That's, I think, the direction for that audience, I think people who are in first world countries where banking works, it will be stablecoins potentially in the back, but they may not hit the front because our systems work, as far as the end consumer is concerned.
In the early days of like stablecoins, the primary use case was wealth preserving, which was predominantly a case for obviously certain global south countries.
Correct.
And not a use case at all for, let's say, Europe or the States.
Well, people have access to the dollar.
People have access to the dollar.
I mean, if you already got access to the dollar, you don't need a synthetic dollar. So, this was the point that was being made, like today, actually, in Token. Paolo was on a panel with Charles Cascarilla, or Chad from Paxos, and this was the point they were making. If you have access to the dollar, you don't need a synthetic dollar. If you don't have access to the dollar, this is a prized possession because you've got access to a risk-free rate, you've got access to a safe haven for your wealth. There's many different use cases they can do outside of speculation.
Do you think that there will be let's say, banks or countries start like adopting stablecoins? There will be a case of them being over leveraged. Let me give you an example. Technically speaking, you go to Silicon Valley Bank, or whoever is the custodial service. You give $1, you get a stablecoin. That stablecoin is in rotation, but that dollar that you gave is invested in T-bills or whatnot.
But there's a difference here. So in my mind, a stablecoin is a fully reserved product. So it's a safer product.
But no one does that.
Well, the stablecoin issuers do, but this is the difference, I think, between tokenized deposits or deposit tokens and a stablecoin. A stablecoin is a fully reserved product. So it's backed one for one, should be backed one for one.
So the dollar remains in the account.
Or it's invested in cash or cash equivalent. So, I can give you an example from my day job. So for GMO Trust, we're New York NYDFS regulated charter. So there's a very specific list of products that we are able to hold our reserve assets in. Mm-hmm. So that is cash, repos, cash equivalents, treasuries not longer than 3 months. It's a very discrete list of high quality liquid assets that we must have our backing assets in. So, and that should be, give or take, a relatively similar process globally now for stablecoins. If you go to most countries and that's what the regulation will say, it's something not too different from this. But a deposit token from a bank is a liability of their balance sheet. So it's fractional reserve banking. It's in deposit form. It's in tokenized form. It's in Web3 form, blockchain form, but it's a blockchain form of a liability on the balance sheet of a bank. So they can do what they like with that. They can, invest it in the same way that if you put when you make a deposit into your bank, it's a loan to the bank, and they fractionalize it. They have capital and regulation that allows them to do that, and that's the way banking works. That's how they do it. So, yeah.
But don't you think like if stablecoin issues come along and folks start to give, let's say, their dollars, this will be an over leverage of that system.
Would you? Well, you mean sort of potentially there's an issue where there might be capital flight out of banks
Correct.
into stablecoin potentially, because I mean it's getting more competitive. What do people want? I think generally they want their money not to lose value, so they need to get yield, risk-free yield, and try and build things up. So if you go to your bank and you deposit money and you're getting 0.1% or whatever it is in the UK or in Singapore and so on, that's not great. You can put it in a stable coin or a yield-bearing stable coin, you get the yield directly, or you put it in a stable coin, you can stake it, you get rewards. It's getting more competitive. So I'm certain that there's sort of a threshold of people, young people who are more crypto savvy and more digitally native. So why do I leave it in there? I've got credit risk against this bank, and actually I can earn more money doing this, and it's in their mind just as safe. There may be people at the other end of the spectrum which will say, no, I'm a multinational company, I need the credit counterparty to be a secure GSIP. It needs to be JP Morgan or whoever it is, and therefore I will use their I prefer the credit risk or the counterparty risk of a JP Morgan fractionalized tokenized product, like their Connexus product, or the Citi token services product, something like this, to a stablecoin. Because a stablecoin for me, I still have counterparty risk, even though it's 100% reserved. That's beyond the risk framework of my policy. So there's a spectrum.
Fair.
Yeah.
Where do you think the biggest opportunities lie? What is the biggest opportunity for stablecoins today?
Wow. Again, it sort of depends on who you are, where you are. I think that stablecoins in general, I think they have the ability to really change the world in terms of quicker, faster, cheaper, has already been proven. I think that's fine. And that applies not just to stable coins, that applies to any form of tokenized money. What I think we really haven't scratched the surface of is the programmability aspect of this. Like, I'm very excited about sort of the agentic AI aspect of this, because, if we think that AI is going to have a major impact on our life going forward, we think that agentic and LLMs and all this kind of stuff is going to be more prevalent. And again, with the GMO hat on, we have a big, like GMO Trust, which is the stablecoin business, is part of GMO Internet, which is a large Japanese conglomerate. We have a very big thesis on AI. We think that's going to be transformational. Like, the whole company has been pushing towards sort of looking at AI opportunities. So if we believe this thesis, then agentic commerce is going to be a natural consequence of that. And the only way to pay those LLMs automatically is through stablecoins. So when Coinbase did the X402 thing, this was like, for me, this is a mind blown. This is brilliant. There'll be more opportunities like that, but this cements for me stablecoins in the embedded in the infrastructure of the future. So there, I think that's really interesting. Really interesting.
Gotcha. One final question from my end.
Sure.
Do you think stablecoins or the stablecoin infrastructure, or like that, the concept of a stablecoin, will allow another currency like sterling, pound sterling, or the euro to gain dominance over the dollar?
Well, we've sort of skirted around. I wouldn't have gone those two. I'd say RMB. No, RMB is the not RMB like rhythm and blue, but RMB. It's that's I think going to be really interesting. Like a BRICS currency, I'd be very interested to see how that plays out. Already digital yuan is being CBDC stuff. They have plans and they're doing stuff. Hong Kong, which is proxy, is doing stuff. There's a lot of digitalization there. A lot of firms are applying to issue stable coins. So yes, I absolutely think that because remember, dollar dominance is happening because there's nothing stronger than the dollar, but that doesn't mean that it's the strongest currency. It means it's the least weak currency. There's a difference. It's like dollar versus other currencies have lost quite a lot of value in the last year or so. If you compare dollar versus sterling, for example, dollar has weakened a lot, but it's still the default choice because it's still the strong,
It's also sentiment.
It's sentiment, yeah. So So I think that will other currencies rise? Yeah, absolutely. So another interesting example, which I think maybe predicates this, is not like it's a validation of digitalization, but like it's a validation that the dollar is not the only coin available, you know? So oil, until very recently, has been priced in dollars, certainly since the 70s, you know, since the political side. They're now open to oil being priced in other currencies,
Yeah.
you know? So RMB, you know, renminbi is one of the currencies. So this lets you think there is bigger games at play here, you know.
Yeah.
So there's a fact that I think Sean from IDA was saying yesterday. China does more trade now with local countries, Asia and Middle East, and I think Europe, than it does with America. So, like, you know, the axis is moving a little bit in terms of trade flow, money movement, and dependency on the US. So, yeah, stablecoins as a part of that is an interesting conversation. Actually, to your earlier point, just the other question, it's not just we're not going straight to like agentic AI. I think like there's much more practical applications where stablecoins can be really interesting. So, you know, escrow, you know,
Yeah.
the escrow moving house purchases, all this kind of stuff, programmatic money, supply chain finance, you know, this kind of stuff where historically we've needed intermediaries.
Yeah.
You now have a payment instrument that's on chain that can be connected to a smart contract. Those two concepts, that's already pretty transformational. So just seeing that play out, where people build cool stuff and on top of that, and use the stablecoin as the payment instrument connected to that action. That's the progress that will have in the next 5 years will really change things. So, you know, something like property in Dubai is now being tokenized.
Oh, yeah.
That's pretty big step. But, you know, if it goes there, it could be global, and then it's very interesting.
So in Japan too, in Tokyo, there was, I think, a building tokenized.
Correct. Yeah. Absolutely.
Is there anything that I've missed about stable standard that I should have asked?
Well, we have an event. We have a number of good members, actually. So I think this is a good stepping stone in our validation. Is like the latest cohort of members have been banks.
Wow.
So State Street is a member of Stablecoin Standard now. Bank Frick is a
Liechtenstein.
member. Yeah, Liechtenstein. We have Silicon Valley Bank, actually, is a member of our group. Anchorage, which is a bank technically as well. So, you know, the latest members are now banks coming into this, which shows the validation of the maturity of the space. Now, it's not just crypto guys. So if you want to join, contact us. It's, you know, stablecoinstandard.com. We have an event in London on the 16th. So we can certainly share the link or something that's easy to do. And yeah, we look forward to seeing everyone and growing the industry together. We've been very, Christian and myself and Ryan have been fans of you guys and what you've been doing, building out the conference circuit globally. You've been actually representing and doing the education as well. So I think you've been bringing the stablecoin to the people. So we want to continue doing that together.
I absolutely enjoyed this conversation. Thank you so much for being on.
My pleasure.